Welcome to this explainer. Today we are stripping away all the noise to totally dissect Avalanche, the layer 1 blockchain that's aggressively gunning for Ethereum's throne. Whether you're tracking the markets or just trying to wrap your head around modern decentralized finance, we're unpacking the mechanics, the market position, and the stark realities of this network.
Out of the sprawling ecosystem of tens of thousands of cryptocurrencies all fighting for capital, this one is currently sitting pretty as the 13th largest project in the entire space. It has captured billions in value. But how exactly did it climb so high? And more importantly, can it actually hold that ground?
Here's what we're looking at today. 1. We'll meet the Avalanche. 2. Dive into how the network works. 3. Cover the pros, cons, and centralization. 4. Peek inside AVAX tokenomics. And 5. Check out its market history and future.
All right, Section 1. Meet the Avalanche, the origins of AVAX.
So Avalanche isn't just some random, faceless codebase. It was actually built by Emin Gunseer, a really prominent computer scientist and Cornell professor. And man, this project moved at lightning speed. He founded Ava Labs back in 2018, and by September 2020, the mainnet was officially live. In just a few short years, backed by the Ava Labs Foundation, it absolutely skyrocketed into the top tier of the crypto rankings.
Now, there's also a really fascinating kind of speculative narrative driving market chatter right now. Because Avalabs is headquartered right in New York, some folks theorize that shifting political winds might actually favor the project. The hypothesis is this: if a national crypto reserve is ever established, an American-founded project like Avalanche might get a very favorable look. We are definitely not taking a political stance here, but it's an undeniable narrative that's influencing the asset's momentum right now.
Moving on to Section 2. How the network works, speed, scale, and the factory floor. Avalanche's core pitch to you and me is being an eco-friendly, hyper-fast competitor to Ethereum. And the contrast? It is pretty stark. While an Ethereum transaction can take several minutes to finalize, chugging along at maybe 15 transactions per second, Avalanche completely crushes those times. We're talking finalized transactions in under 2 seconds. It is blazing fast, all while maintaining significantly lower transaction costs, the gas fees, than its older rival.
So how exactly do they pull that off? Well, you've got to think of Avalanche not as one clogged-up blockchain, but more like a highly specialized factory floor with 3 totally distinct departments splitting the workload. You have the X chain, handling the creation and trading of native assets. Then there's the C chain, executing all the smart contracts. And here's the kicker: it's fully compatible with Ethereum, so developers can easily port their projects over. And finally, the P chain operates behind the scenes, managing validators and coordinating these things called subnets. Let's actually define those subnets, because they are the absolute crown jewel of the Avalanche pitch. A subnet is basically a custom, independent blockchain built right on top of the network. Imagine a massive video game or a Wall Street bank wanting their very own dedicated lane on the highway, just so they don't get slowed down by everyone else's traffic. Subnets let them run parallel to the main network, keeping the whole ecosystem totally scalable and lightning fast.
Next up, Section 3. Pros, cons, and centralization. Our objective reality check.
Because despite that amazing speed, Avalanche is facing some very real, verifiable headwinds. First up is a pretty serious centralization concern. To run a validator, you have to stake 2,000 AVAX. That is a massive financial barrier that essentially locks out the average user and centralizes power. On top of that, critics point to Avalab's outsized corporate influence, a heavy geographic concentration of validators, and network struggles where bot activity has actually caused temporary fee spikes. But you know what the biggest long-term worry is? Institutional adoption is lagging. Despite that brilliant subnet tech we just talked about, a lot of developers are simply choosing to build on Ethereum's Layer 2 solutions instead.
All right, let's pivot to the money. Section 4. Inside AVAX tokenomics and the money mechanics.
When evaluating any crypto asset, you absolutely have to look at the supply. For AVAX, the absolute maximum supply was initially hard-capped at exactly 720 million tokens. The network literally cannot arbitrarily print more beyond its core programming, which gives investors a nice level of predictable scarcity.
But how did they distribute those 720 million tokens? It was an exact 50-50 split. Right at launch, 360 million tokens were immediately allocated to private sales, the founding team, and community incentives. The remaining half? They were locked away, designed to be slowly released over time to reward the validators who secure the network. Currently, stakers can earn up to an 11% yield, though of course that rate will naturally drop as more tokens enter circulation. Now, watch how this builds into a seriously aggressive deflationary machine. Unlike other networks that only burn a tiny portion of their fees, Avalanche burns everything. Every single time you pay a network fee in AVAX, whether you're sending a token or playing a game, 100% of that fee is sent to a burn address and destroyed forever. Because of this constant burning, the actual maximum supply isn't even 720 million anymore. It has already dropped to around 715.7 million tokens. That creates a constant pressure of deflationary scarcity as long as people are actually using the network.
Which brings us to Section 5, Market History and Future, Price Action, and Final Thoughts.
If we look back at the historical data, AVAX has been an incredibly wild ride. Back during that massive, euphoria-driven bull run of late 2021, AVAX hit an absolutely impressive all-time high of $146.22. But, gravity always takes hold in crypto. Currently, the asset is sitting at a staggering drop of over 85% from that euphoric peak.
Context is absolutely everything in markets, and this is really a tale of two different eras. Through late 2021 and early 2022, AVAX was the absolute market darling. It vastly outpaced the percentage gains of Bitcoin and heavily rewarded early investors. But the current environment? It paints a totally different picture. Bitcoin has firmly retaken the lead, and AVAX has been struggling to keep pace, losing some significant ground relative to Bitcoin's recent price action.
But listen, Avalanche isn't just sitting idle while they fight to regain dominance against rivals like Solana. They are tapping into their deep pockets to literally bulletproof their ecosystem. They've rolled out this massive bug bounty program, offering millions of dollars to white-hat hackers who can find and expose vulnerabilities across their 3 chains. It is a bold move, and it proves they are dead serious about achieving true institutional-grade security.
Which brings us to the ultimate question. We've seen the blazing fast 3-chain architecture, we've looked at the highly aggressive deflationary tokenomics, but we've also weighed all of that against the stark centralization realities and the uphill battle for institutional adoption. So, what do you think? Is Avalanche a truly innovative powerhouse that's going to carve out its own massive future? Or is it ultimately destined to be overshadowed by the giants it's trying to replace? That is the billion-dollar question driving the market right now, and one we leave you to ponder. Thanks for joining us for this explainer, and keep learning.